Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today's Hump Day. It's Wednesday, October 3rd. We got a few economic reports to go over, so we'll just jump right into it. The big one today will be the ADP employment for the month of September. This is the first one of the three that we'll get this week. The big one being on Friday, brought to you by the Bureau of Labor Statistics. Job numbers for September, and then of course every Thursday we get the initial jobless claims. ADP kind of gives you the private sector. So previous reporting was 168,000. This was actually revised upwards from 163,000. Initially last month it was announced 163,000, and it was revised upward to 168,000. So jobs are even better than what we're seeing today for September's numbers. And the forecast was supposed to be 185, and it came in a whopping 230,000 jobs. Now, potential we could have a really good jobs number from the Bureau of Labor Statistics. This doesn't always translate the same as the other one, but the Bureau of Labor Statistics, which has more weight to it. But we could expect to see that because if you recall, a few weeks ago we had the sample week, and it was a very low. It was like 202 or 203,000 if people apply for an employment rate, and which could can really show a strong number there. It makes it part of the calculation of the job numbers. So we'll find that out obviously on Friday, but ADP definitely looking strong, showing some strong jobs here. The last two, of course, so we got the services industry. We had these mention numbers on Monday. Today we get to see the services, and you'll see here we have a mixed report again, kind of like we saw Monday. So market services PMI for September, we had August 54.8. Anything above 50 on these two indexes shows optimism or expansion, and it dropped. Market shows that it dropped 50 to 53.5. Whereas ISM non-manufacturing index or house services index went from 58.5 with a forecast of 58 with a slight dip, actually went upwards to 61.6. So kind of like what we saw on Monday, where one was dropped a little bit and the other one increased. Same thing we're seeing here today for services. Stock market's up today. It's kind of shrugging off the geopolitical news. We got Italy with their budget. They're at heads with the EU with their budget, and we got of course trade with China. We got a whole bunch of different stuff kind of going on right now. The Kavanaugh situation, but they're kind of shrugging those off, and they really like those ADP numbers, and they're kind of looking at that. But we do got Fed members speaking, including the Chairman Powell, Fed Chair Powell spoke, and he kind of reiterated that they don't expect any spike in inflation. And of course, the stock market's liking that. The Dow's up over 100 today again. A lot of these are hitting new highs, so so people who are in the stock market are obviously liking things. We're obviously looking at their portfolio right now. On the other hand, we'll take a look here at the bond market. It's going the opposite direction. We're down about 31 basis points. We're breaking below this floor support that we had for about a week here, and we're breaking below that right now. We already had a price for the worst this morning. So here on the West Coast, we'll probably get that built into it. But those on the East Coast who get their pricing earlier already had a price for the worst right away in the morning here. So again, we're down about 31 basis points, which translates to just over a quarter a point to that no point loan earlier to what it was yesterday. All right, so hopefully we'll get a little reprieve here, kind of come back a little bit. As you can see, we're just barely on this line here, and look like we could be coming back down a little bit. But same thing with yields. Yields had a big spike. It's testing its ceiling here. Hopefully it holds here and kind of keeps it in, in contrast here. Hopefully it keeps it down a little bit, which kind of, because if it breaks above it, we got a lot more space, and that means rates continue to rise. So hopefully we can contain that a little bit further, longer. And as you can see here, it's still with the stochastic, it still hasn't gone down. It's been that way for just almost a month. As you can see, we've been this overbought or overbought position here, and we'll have to kind of see. Hopefully, it kind of brings back down there. We saw that we haven't seen this really since July and August. This type of reading here. All right, so that wraps things up. Rates are a little bit higher today. If you want to see, learn about any changes or updates in the market, just come over to Twitter. You can find me at Mike Bjork. I do post throughout the day on Twitter, and you can get the updates right there. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.